Welcome to all the participants once again to this afternoon's webinar on the impact of COVID on the economy in general and specifically in the fintech and healthcare sectors. If you will permit me, I will briefly introduce the panelists, starting with Santosh, who's an external advisor, and he heads up the Valuation Advisory Services practice at Duff Phelps India. Santosh has more than 15 years experience in valuation and financial advisory services. He was heading the financial instrument valuation practice in American Appraisal India earlier, and was South India valuation leader in Deloitte, and was part of the founding team of Grant Thornton in Bangalore. He has been a speaker at several seminars, workshops, including those organized by the Institute of Chartered Accountants of India. He was an international keynote speaker in a conference on business valuation organized by RICS London. Santosh's prior experience includes stints with Grant Thornton and Deloitte. Santosh is a qualified chartered accountant and a partner of DNP Advisory. The next panelist is Ajit Nagar. He's a seasoned entrepreneur, has built multiple companies in the life science and technology domain that have generated thousands of jobs and hundreds of millions of dollars in revenue over their lifetime. In 2019, Ajit founded Scitara Corporation, an emerging software company that has created a cloud-based digital platform focusing on transforming scientific lab informatics connectivity for multimodal laboratories in the pharmaceutical, biotechnology, and related industries. Prior to Scitara, he founded Sciformix Corporation in 2007, a leading scientific process organization providing scientific services to pharmaceutical, generic pharmaceutical, consumer product, medical device, and contract research companies. Prior to that, he founded New Genesis Technologies Corporation in 1996, a company that became a worldwide leader in scientific data management. Currently serving as the Commonwealth of Massachusetts as a member of one of the Honorable Governor Charlie Baker's Advisory Council, a charter member of TiE, and served on the board of trustees of TiE Mumbai. Is an active investor and advisor to several startups. One such startup called HealthSpring has become a market leader in delivering modern family medical care through a chain of community medical centers in India. And last but not least, we have Dewang, who is the founder and CEO of Atom Technologies Limited. He's been the director of the company since 2005 with a record of establishing sound business across the country and breaking new grounds. Dewang is actively involved in the payments industry. He's the co-chair of the Merchant Aggregators Committee in the Payment Council of India, as well as a member of Executive Council of the Payment Council of India. He's an ergophilia, but never misses a chance when it comes to displaying his talent on the dance floor. I must confess, I had to look up the word in my dictionary. Ergophilia, it turns out, is one who likes to work and exercise a lot. Have I got that right, Dewang?
Yeah.
So please welcome all the panelists for the lively session that we expect to have this afternoon. We're planning to have the three speakers each take 15 minutes. We'll start with Santosh of Duff Phelps, who will be talking about the survey they had done on the impact of COVID-19 on startups in India, both in general and specifically to the two sectors we are going to be talking about. Thereafter, we'll have Dewang, and we'll end with Ajit. At the end of the three presentations, we will have a Q&A session, time permitting. I have some questions which I've received from participants at the time of registration. Others, feel free to use the chat. We will monitor the chat box for other questions, which we will then bring up at the end. There can be general questions to all the panelists or specific to one of the panelists. You can specify in the chat. Thank you. Can we start with Santosh, please?
Thanks, Arun. So maybe while the slides are being presented, I can just give a background of our research and why we actually came out with this research. End of March and April, when basically the pandemic had, when World Health Organization basically declared this as a pandemic, actually there was a lot of fear, there was a lot of uncertainty, and it was in fact it was peak. The fear and uncertainty was peak during the second half of March and the first half of April. That was actually supported by huge volatility in stock markets. The fear was actually at its peak, and everybody were talking about impact of this pandemic on various industries. And usually, what happens is when there is fear, when there is uncertainty, actually there is opportunity, and also there is some sort of a, I would say, destabilization in the economy in general. And because consumer behavior changes, consumer preferences change, government policies change, industries, the way they function, the businesses, how they are actually run, everything changes. And hence there is a significant impact on economy, on certain industries. There could be positive impact on some industries, there could be negative impact on other industries. So we were actually trying to understand what is the impact on various industries, and then there were a lot of news articles, experts coming and talking about how this would impact oil and gas industry, how this would impact pharmacy industry, largely the old tech, blue chip, old economy industries. Everybody were talking about the old economy industries. But we also parallelly were seeing many startups actually closing down, many startups actually firing people, all that. So obviously startups are not insulated or immune to this impact. They are definitely impacted. In fact, they are impacted more because startups usually work on a binary sort of most startups work on sort of a binary mode where it'll either be a success or a failure. They are asset light, they are scalable, and hence they can actually be very successful. And if something goes wrong, they can actually fold up very quickly as well. So the impact of this pandemic or impact of any similar blue swan event would actually be very, very magnified for a startup. So that's when we realized, that's when we thought that why don't we actually do a research on certain industries in startup, which are largely the tech-based industries in startup, to see how this pandemic would actually impact their businesses, mainly on 2-3 counts. One is basically due to the change in consumer behavior and preferences. The second is the situation that we are in, lockdown and no travel restrictions and all that. And the third one being the government and regulatory changes that are happening. I mean, we saw a lot of regulatory changes because government was forced to actually think differently this time compared to what they used to do or what their policies used to indicate maybe pre-COVID. So based on these 3 aspects, we actually took a few industries and we actually came out with a few subsectors and actually came out with the research. So can you go to the next slide, please? Yeah, so I mean, I have actually already discussed most points here. Sorry. So actually, if you see, NASSCOM conducted a study recently which revealed that 70% of Indian startups have very little cash to survive, maybe less than 3 months, and 40% of the startups surveyed that it would be, I mean, maybe they would have to actually close their business or halt their business due to lack of funds. So it was quite severe. I mean, the impact was quite severe on the startup ecosystem, purely because of, I would say, very light balance sheets that they have. So that is very, very common. And the second common underlying theme that we see in today's new age business models is the technology, which is actually a boon and also a bane. I mean, the positive is it is scalable. It can give you a quick scalability with limited costs. And the bane is that your balance sheets are always weak. And if there is prolonged disruption to your business because of certain economic, because of some external factors, it will be very, very difficult because you don't have strong balance sheets to support you. You cannot actually borrow money from banks. Neither you have reserved cash balances to actually take care of you or the business or the employees during this prolonged disruption. So these are certain aspects which will make startups slightly different from your old economy industries or in the old economy companies, and that's the reason the impact could be quite magnified. Can we just go to the next slide, please? Yeah. So again, some industries are positively impacted, some industries are negatively impacted. But actually, if you see, there are some of these are actually due to the accelerated change in consumer behavior and consumer preferences and change in government policies that I actually briefed about earlier. And also, we've seen a big shift from physical to digital and from offline to online in all aspects. I mean, we're not talking. I mean, maybe we're not just restricting ourselves here to health tech and fintech. I mean, whether it is ed tech, whether it is food tech, there's a lot of move to digital that is happening. It was there earlier, but then now it is actually much more, and people are forced to. So consumer behaviors have actually changed. And typically, a similar change in consumer behavior would actually take years. Maybe it would have taken maybe another 6 years to basically get many people onto the digital platform. But actually, if you see, because of this pandemic, there is a significant, I would say there is an accelerated move where consumer behavior has actually changed. So in a matter of months, there has been actually a change or a shift in consumer behavior and actually consumer, I would say, preferences. That is quite amazing. And that gives a lot of opportunities for certain startups. And obviously, on the flip side, there will be some of the startups which will have to actually close down because they will not be able to, because of the change in the consumer behavior, maybe they will not be able to serve any further. And also, as I told you, government policies are also very different. They actually, if you see, some of the change that the government has brought about is actually moving everybody to digital and actually transactions online. The impact of certain policy changes is now significantly bigger than the demonetization. I mean, I'm sure Dewang will talk about the impact of COVID on fintech, and demonetization had actually had a significant positive impact on fintech. And maybe this could actually be much bigger than what demonetization did to that particular industry. So very, I would say, varied impact on certain businesses. And now if you see, there is a significant change in how businesses are done and how transactions are completed now compared to pre-COVID levels. Can you go to the next slide, please? Yeah, so these were some of the subsectors that we actually picked up for our research. And we analyzed them and basically rated them into three different factors. One is basically the impact, whether it is a positive impact or negative impact or a neutral. And the second is the intensity of impact. How intense is the impact? Maybe it is, for certain industries, it is positive, but then is it significantly positive or not so significantly positive? So that is basically the intensity of impact. And the third is expected term of impact. For certain maybe sectors, it is a very short-term impact. For certain, it could be a medium, and for some, it could be long-term. So this is how actually we have categorized. And if you see, EdTech is actually the most positive, I would say, positively impacted subsector with a high intensity of impact. And also, we believe that the term of impact could be medium, because at some point in time, things will come back to normal. But then still, the fact that the consumer behavior would have changed, consumer would have come actually onto the platform, who would have otherwise maybe not come or reluctant to come. Maybe they would actually like it. They may start liking it. They may appreciate the ease of the technology. So actually, there could be a medium-term impact, even though the COVID situation might go away in one and a half year. but still we believe that maybe tech as a sector would actually benefit in the medium term. Consumer local travel and actually travel, tourism and entertainment, the fifth one in this list, negatively impacted, highly impacted because of the travel restrictions and lockdown restrictions. No surprises there. If you look at fintech, consumer tech, and hyperlocal groceries and retail marketplace, positively impacted either because of the consumer behavior or because of government regulatory changes or because of both of these factors. And the intensity of impact is actually, according to us, it is medium, mainly because of the lockdown and because of other restrictions. The number of transactions might have increased, but the large transactions have gone away. People are not buying maybe discretionary items. People are actually not traveling. So from that perspective, maybe the number of transactions on the digital platform might have increased, but I would say per ticket size of these transactions would have actually gone down. But obviously, when things come back to normal, maybe the number of transactions might continue because people would have got onto this platform and they would appreciate the ease of transacting on these platforms. But then the bigger transactions, the discretionary spend would come back, the travel would come back. So from that perspective, the spends would increase and the ticket size would increase. So we believe these industries would actually benefit. These subsectors would actually benefit from this, from the pandemic and what the pandemic has actually made to the way people actually think or the preferences that people have. And of course, hyperlocal groceries also, we would have seen how people have actually started ordering more rather than actually going even to the mom and pop store just 100 meters away from your house. That also actually has made people come back to the digital platform. So overall, most of these tech-based industries are actually benefited or would benefit in medium to long term, except for the ones which would have some exposure for entertainment maybe or travel, tourism, where the impact would be slightly more painful because of all the restrictions. Can we move to the next slide, please?
2 minutes, Santosh.
Sure. Yeah, so fintech, as we have, as I quickly updated, I mean, positive impact, mainly because people are moving to the digital platform, not going out, and hence more transactions, more bill payments are happening on the platform. People want products like insurance because now they're more focused towards health. They're more focused towards actually risk mitigation tools, so like insurance, and the digital sales is actually the preferred channel. Increased retail participation in stock trading and investments because people are actually at home, working from home. That gives them some extra time maybe to invest and trade in stocks. Investment itself has actually increased because of all the things that pandemic has brought about. Small loans demand has increased. So from this perspective, actually, we think that fintech has a lot to gain from what has happened due to the pandemic. Demonetization in 2016 was a government-designed initiative which supported fintech, and COVID is an accident which actually further pushes the sector into a positive zone. Next slide, please. The last one. Yeah, health tech also actually has benefited. Favorable government policies is one of the main reason because government in fact came out with telemedicine guidelines and also started encouraging people to actually get consultations on the tech platform, which otherwise they were not really supportive of. So a significant actually change in government move towards healthcare technology has actually changed. Positively impacted this space. And recent trends also, there are quite a few companies which are significantly benefited from this move. 600% increase in practice consultations. M-Fine has seen 3 to 4 times increase in business. And if you see the number of transactions, Reliance acquisition of NetMeds or Practo's recent fundraise, Pharma Easy and MedLife's merger, these are some of the things that that is purely happening because of interest in this space. So Arun, those were my slides, and that is a quick background about the research that we have done.
Thanks a lot, Santosh. Thanks for completing at the 15 minutes time. So I'm sure the audience has something to think about. Unfortunately, we don't have time at this time to permit questions. So I will move on to the next panelist. I will request Dewang to come in with his remarks on the impact of COVID on the fintech industry sector. And hopefully we'll have time at the end for some questions. Dewang?
Yeah, good, perfect. Thanks, Arun. I think, can I share the screen if you don't mind? Oh,
yeah.
Are you able to see my screen?
Yeah.
So I think Santosh covered quite a bit of this, but if I look at slicing basically the overall fintech space, because before we get into understanding what is the code impact, but we need to at least understand fintech is not a small space. It's basically sliced down into multiple areas out there. I only have covered 3 out of here. So when you look at fintech, you're looking at essentially on the hot areas right now, you're talking about digital payments, you're talking about lending, you're talking about wealth tech and financial markets, or robo advisories, then you're talking about insurtech, and finally you're talking about regtech. And again, the 6th new segment that is emerging right now is B2B fintech, that is new banking, which is basically the hottest topic for the overall last 1.5 years right now. COVID, like if you look at the overall, and the way COVID has, people have reacted to COVID, I think we've been close to about 150 days in lockdown right now. So technically speaking, last 5 months people have spent in lockdown. Worst impacted month technically was the month of April, wherein transactions and everything, the whole business had shrunk virtually everywhere. And when you looked at whether it was fintech or anything else, so in case of fintech and all, we had seen transactions plummet by almost about 30 to 40% in the month of April, whereas in terms of even wallet transactions and every mode, every sector of fintech had virtually seen a downturn when we looked at April, because people were unsure. There was kind of non-clarity in terms of where this would be headed and how much lockdown are we going to have. As we speak right now, there are, again, when you look at, let's start with digital payments. So digital payments, I would again break this down into 2 different silos there. One silo essentially is basically the offline, that is basically the brick and mortar, the merchants who are using essentially the point of sale terminal, the QR codes, and a whole lot of traffic out there. What COVID has done, because ultimately any kind of digital payment channel will survive as long as the business survives. Whatever business segments that have got impacted or that have got hit, that is has a direct correlation on the payment traffic as well. So same is the case with digital payments on offline mode. Large part of mall format, large part of retail crowd, everybody was shut except basically services which are essential services, just like your grocery or pharma or other services. The rest of the services shut down, which essentially impacted the entire transaction load on basically the offline formats. When you looked at the online formats, I think we've seen some pretty much good use cases emerging out of the whole case right now. So one, basically, of course, a lot more people were getting into financial market. They were transacting a lot more and they were picking a lot more payments there. EdTech and education has seen, again, a revelation in terms of, I think the whole payment cycle itself will change in case it comes of EdTech. And new class emerged. Typically, I think which Santosh spoke about was health tech. So health tech, teleconsulting was one sector which was like, for example, a shun off. Basically, nobody was touching that sector, but thanks to government intervention, they had allowed doctors to get into basically health tech, and teleconsulting padded along with payments channels. I think that has grown. That has been one of the new sectors that has been basically mushrooming for us in that sense. And second is what we're seeing is people who go down to hospitals, even for example, when they go down and make payments at the counter of the hospitals are preferring to go touchless. So instead of having point of sale machines or a QR code payment system or anything at the counters, a lot of hospital customers have gone down and prefer to have online payment channels, they have asked, and this is specifically true for COVID hospitals. We are almost working with almost about 10 odd hospitals right now, and a large part of them have gone down and seen and asked people to come down, make a payment using online channels or what we call as link-based payments, and do transactions there. Enough has been said about UPI transactions. UPI transactions have hit the roof virtually in the last 3 or 4 months, both offline as well as online, because sitting at home, a lot of consumption has gone in for OTT channels. Because if you look at last 3 months, what people have spent the maximum amount of money on OTT, that is basically on Netflix, Amazon Prime, or any of those platforms. Second is basically they spent a lot of money on the electricity and utility players, whether it's ISPs or electricity or anything else. And third is basically on grocery and basically pharma. So there are 3 sectors where people have essentially spent money on the last whole 4 or 5 months. Of course, they're now with Amazon and other people starting out, people are spending money increasingly on digital channels for all the websites and all. But with this, we've seen a lot more transactions and a lot more transactions growing up, including for B2B commerce. When you look at the B2B payment life cycle, a lot of checks, because a lot of people were preferring to still use checks because of surely the time cycle of checks to get cleared and everything is because of the inertia associated with checks out there. Checks have got replaced by RTGS and NEFTs, which is a very positive sign when you look at from the overall payment framework. When you look at from the overall industry, yes, what it augurs, this has been very, very habit changing from every class of society. So whether we are talking about people from cities, but also people in rural India, what we call the Bharat, real Bharat out there, we've seen habits changing out there where people have moved from using cash out there, they've moved on to using basically card payments, especially because now we have the education season going on. We do a lot of work through Atom on fee payments. And we've seen a lot more students who are going down and using basically payment channels increasingly in rural areas. On the second side, if you look at the flip side is on the lending. Lending, although consumer lending has gone up, you've seen moratorium period announced and everything else. Merchant cash advance has taken a huge hit. So we do work with a lot of, we have a strong physical network also. And we've been working with the partners like Bajaj Finserv and Neo Growth and a whole lot of other players. Because of the lockdown and because of the moratorium, they have not been able to go down and create new loans out there. The loan growth virtually has gone absolutely silent out there. On the consumer lending side, I'm sure basically the things have gone up because they're looking, because consumers are going and spending more and more, but not necessarily on luxury goods or any non-essentials. So again, consumer spending is very, very discretionary out there. So I would slightly have a different opinion there in terms of consumer lending also going up, but it's not gone up as much as it could have really gone. Third sector, which has really, really benefited out here, is basically the Wealthtech or the financial markets. Financial markets have seen more than 1 million customers that have got added out here. The rookie investors are driving actually the market behavior right now. I think we keep on seeing that there are stocks which are being moved by basically the movements of the rookie investors, and these are contributing not necessarily only to the broking platforms like Zerodha or Upstocks or anything else, but also at the same time, basically they're going down and doing a lot more on Wealthtech platforms like InWealth or Cube or any other kind of platforms. So COVID has been a kind of a lot of different revelations. And finally, when you talk about InsurTech, of course, insurance has been basically the bellwether right now because everybody trying to rush down to get insurance, whether it's health insurance or whether it's life insurance, using any kind of modes out there. So the insurance traffic has definitely gone up. And I think the companies out there have been basically seen a lot of focus out there. But this is more from the trade side of the whole thing. And we've seen what the main observation which is there in the last 3 months or 5 months as we speak right now. Number one, this has been I think huge amount of habits, individual habits have changed and have gone on a major shift. But second, flip side of the whole thing, when we look at the whole thing, is I think the investment climate. What has happened right now, because there's something we've seen from the sector, a lot of companies, this typically we would call as a death knell period. So we would see a lot more companies who are not well capitalized going down under right now because they do not have the necessary capital to survive basically maybe another 3 months or 6 months. Because today when you go down and talk to an investor, investors would definitely take their own time to basically think and decide and basically look at the term sheets are not coming out, especially in the fintech sector right now. So although we've seen transactions going from January to basically June, we've seen close to about $1.5 billion worth of investment deals happening in the fintech sector, but definitely the large amount of money is actually going into people in Series C, Series D, and Series C rounds upwards. it is not going into basically new companies or new startups or new kind of environment out there. Because again, from an investor psyche point of view, this any kind of the clarity in terms of how the whole movement would happen, how and what direction this would go into is very, very unclear. And whether people will be able to make money or not able to make money, that's going to become a major force. So from just to I think end this thing, I would not take too much of time right now. There has been pluses and minuses in case for the COVID impact for the fintech sector, and these are here to stay, except the financial market, because financial markets again are driven largely by sentimental analysis, and there are people sitting at home. So my sense is those sectors will see a shift downwards over a period of time. But when you look at digital payments or lending or maybe insurtech, these are definite. And new banking, of course, these are sectors which are going to look up right now, especially new banking, because new banking, a lot of companies are going to look at account receivable and payables in a different way right now. And I think that is where a whole lot of automation is going to come in. So of course, this has been but from an investment side, this is a challenging period. And if there are startups and people who are, one advice I would say is people who are trying to venture into and creating something. Yes, if you have the capital right now and you're able to bootstrap and survive for the next 6 months or a year easily, comfortably, go ahead and please go ahead and do that, because most of the new companies and most of the shining unicorns have basically emerged from basically a downturn only, and they have not emerged from basically a good times, but they come from the bad times. So I think this is an apt time to start out. But if you are not well capitalized, I think stay put, sit on cash. Cash is the king right now. I think that's the advice I would give. Thanks, Arun. I think
thanks, Dewang. That's very, very helpful, very valuable comments. I think since we have a couple of minutes left from your allotted 15 minutes, can we just talk about one of the points on the lending side? The impression I have is that in some sectors, especially the demand itself was lower, which would naturally impact fintech lenders. And equally, the supply side was also affected. As you said, NBFCs were not lending because they themselves couldn't borrow money, which is probably a carryover from the ILFS kind of crisis a couple of years ago. So you had a double whammy, I think, on some fintechs. Initially, no demand, and subsequently, no supply. Would that be fair?
Yeah, that would be fair. Absolutely correct in saying that. And even in the West, well-established players, when you look at players like even a Bajaj Finserv or somebody else, who don't have any problems with respect to basically capital, because they're sitting a huge amount of capital out there. Because of large part of moratorium, because one of the things that hit them also was the moratorium. There is certain limit to which maybe NBFC could take care of the moratorium periods. Banks were able to really cushion out the moratorium period thanks to RBI and other people. So there are multiple impact on the lenders out there because of regulatory changes as well as basically from the environmental changes.
I noticed you didn't mention, neither you nor Santosh mentioned agri-tech, which seems to be a new emerging sector in the startup space, farm to fork kind of initiative. And that seems to have done fairly well. Would you like to mention that briefly?
That sector has definitely gone, because ultimately what has happened right now in the whole lockdown period is when you look at a sectoral analysis out there, you had large basically distributors out there who are picking up material from the farm and distributing out there, the whole supply chain. Because ultimately what we're trying to disrupt out here is basically India has always had a multi-layer intermediation layer in terms of when you go to when you go down to the farm out there. So you have Adatyas and you have multiple level of agents out there. So before basically any farm good could reach out basically to the end consumer, it was a long chain of things. Thanks to COVID, what has happened is basically you have had basically agri-tech companies going down and playing a single level of distribution chain, just picking it up from the farmers or taking from their own contractual farms and directly giving it to the consumers. And again, the environment was more in terms of safety. So for example, the building which I live in, so we were only allowed, for example, the tempos should come out from outside and basically who were actual producers of those goods or anything else. So none of because traditionally India has been going down to the market and doing it from hawkers and everybody else. Now that hawkers were entirely out of the system out there. The only way you could do it basically from this agri players itself. And that, I think that fundamentally changed the whole shift and behavior out there. And again, that behavioral shift is again going to be there still, because again, a lot more things can be done on agri-tech per se. It's not only about basically farm to fork, right?
Sure.
But the whole lot of science behind agri-tech can come in, right, in terms of your weather analysis to everything else. A lot more, I think, investments are going to go into
crop insurance and stuff
absolutely,
like that.
Absolutely.
So thank you, Dewang. That's very, very helpful and insightful. If we can move on to Ajit Nagral now, please, Ajit.
Yeah, thanks, Arun. And if I have a couple of slides, if they can be put up. But while that's happening, I wanted to sort of set the context of what I'm going to talk about. First of all, I'm going to cover both healthcare as well as life sciences. They are so very interconnected that it's important to do that. Secondly, my initial take when I looked at this whole topic, particularly coming from the healthcare and life science sector, is twofold. Number one, it's an evergreen sector, and it has actually significantly benefited from the current crisis in multiple ways. Secondly, when you talk about startups and the clients in the healthcare sector that we sell to, these clients have very long-term cycles to their business. So a 3 to 4 months to 5 months to 6 months really doesn't matter for for large healthcare companies or pharmaceutical companies or biotech companies. So really I want to talk about two different things. One is the opportunities, and whatever risks are there, there certainly are risks, and how do you mitigate those risks, and how do you mitigate that impact. Santosh has mentioned telehealth as part of his project or his research report that he put out. But in addition to telehealth, I've seen a lot of growth in the home health sector, which is fairly significant, and there's a lot of technology coming in there. Diagnostics is another huge sector. For obvious reasons, diagnostics is thriving in the current situation. For those who are focused on digital health, both the tools side and the therapeutic side are seeing significant gains. When it comes to life sciences, there are really three areas that I am personally involved in, but also areas that are seeing a lot of transactions and a lot of growth. One area is the whole digital transformation. As other industries have gone through digital transformation, the life science sector it's just about starting to go through it. Life sciences, as you perhaps know, lags other industries typically because they are highly regulated and they are by their very nature a conservative industry. So anybody who's in the digital transformation space ought to look at life sciences. There are huge opportunities there. Then the whole area of tools to accelerate the biotech revolution. But biotech has pretty much taken over the pharma sector. Most new drugs that are going to come out in the market are going to be biological based. Fewer and fewer drugs are going to be chemical based. And the last one is community-based solutions. It's true of horizontals in the tech space, but it's also true of verticals, and also remains true of the healthcare and life science sector. Solutions, any solution that you put out where it's a significant impact on whether it's a developer community or whether it's in our case, it's a scientific community, or interestingly enough, it's the community at large in terms of, whether you are a device community or you are a research community. If you have tools and technologies that can involve community, your growth is typically seen to be fairly significant. Next slide, please. There was one more slide. I'm not sure whether we can put that up. Yes, here you go. I thought I would talk a little bit about how do you mitigate some of the impact. I know Dewang did talk about cash conservation. Number one thing, if you have investors, if you have VCs in you, I'm sure you got that phone call very early on saying, save that cash. Because cash is what will get you through this pandemic. So every company has or is trying to figure out ways to conserve this cash. The next point I wanted to make, that pandemic or not, the fundamentals of business haven't changed. What your value proposition is, your track record, the leadership you can exhibit. As long as you stay rooted in those fundamentals, I strongly believe you will be able to mitigate that impact. We talked a little bit about creating a strong community. I'm happy to take a question or two around that. What I have learned, across the board, and I'm now, done a software consulting company. I've done a global services company, and I'm also doing a products and a digital transformation company. In this day and age, partnerships are becoming more and more important. And so, for example, if you want to sell a product in the market, today it's hard, or for the foreseeable future, and maybe this becomes the way to do business. It's going to be hard for you to show up at client sites all the time. So find channels which already exist at these client sites and let them show up, rather than you trying to. You're a new startup. You're trying to create a sales channel. Leverage those existing channels. You will significantly benefit from it. Embracing remote, for us it was pretty much serendipity. But when you have digital transformation infrastructure you're building, partly what you're also doing is you're allowing, in our case, you're allowing the scientists and research to embrace remote. So you don't have to be in the lab all the time. You can work remotely. You can actually run experiments remotely. So by embracing remote, you are actually helping your cause. Be a deal maker in all aspects of the business. There are opportunities not just with customers. There are opportunities with employees, with vendors. There are opportunities with your VCs, with your investors. You got, everybody understands everybody's situation. So you gotta be able to figure out how to make deals. And the last but not the least, this too shall pass. In where I sit and in our industry, the recovery has already started. We are starting to see deals. So stay the course. Soon things are going to come around, particularly if you are in the tech space or any of the verticals that we talked about. Happy to answer any questions.
Thanks, Ajit. If I may, even sticking to this the last slide that you put up, where you talked about cash conservation, perhaps for the benefit of our audience and in response to a specific question we had, could you suggest some ways in which various companies are conserving cash? I mean, whether it's
So it starts with management, right? Management typically is well paid. You start with management. You set an example. You say, I'm going to take 20, 30, 40%. I've seen somewhere in that range. Management level people taking a pay cut in return, potentially for more stock options or more stocks in the company. The next level down, you do a 10% pay cut, and you can either compensate them with stock or create a bonus plan based on how the business recovers. You can negotiate better deals with your vendors, whether it's rent, whether it's other areas. There are multiple ways. It doesn't take that long. It's maybe a week-long exercise for you to work through your situation, and there are sort of multiple ways to do that. But it starts with you.
Yes.
And that's the most important thing.
Absolutely. And it's a sure way of reducing payroll costs without having to retrench people.
Correct.
Because when the panic is over, then you try to recruit, you'll have problems if you had, in fact, cut headcount.
Of course, if you don't have a choice, you have to
Sure.
sort of.
But it's more a last resort, I would suggest, than a first step.
That's right.
So I think that answers the question that some people asked. So there was a specific question also, Ajit, for you. Should one have one's own digital platform for telemed consultation or collaborate with corporate hospitals? I don't know if that makes sense, the question.
So when you say collaborate with, I don't think, corporate hospitals can be your source for a good quality digital platform, right? So I would suggest if your goal is to be sort of be widely accepted, you ought to have your own. I always, I always tell my clients, particularly in the life science space, let us do technology so that you can do science. Let's not reverse roles, or let's not confuse the two things.
Yeah, absolutely with you. So there's a question which is a little more general, Ajit. Either you can tackle it or we can ask the other panelists. What is the impact of COVID on training and upskilling employees, especially with reduced budgets?
I think,
Dewang, go ahead.
Yeah, go ahead, Dewang.
So I think what we've seen in the last 3 or 4 months, I think first of all, there has been a glut of webinars and basically information which has been going around, right?
There's been a flood of them, in fact.
Yeah. So, but what has happened right now? People have been doing a lot of upskilling, reskilling right now, and the newer age platforms like Upgrad or maybe Coursera or everybody else have come up to speed right now. And I think what has happened there is basically it's become a satirized kind of a courseware out there, and people have spent an incredible amount of time spending on basically learning new skills, and that's a good and a very welcome step, where people have basically spending their time and energy in trying to learn something new out there. Yes, and that definitely, from a learning and upskilling point of view, has definitely helped a lot of things. But on the counter side, this is basically from an organized learning experience kind of a thing, and especially when you look at vocational or specialized skills training and other things. When you look at from the other side, from an tech point of view, from learning, you had a lot more learning management systems like Byju's and all have gone down and spoken about your learning management systems and all. And we've seen, for example, I personally invested in a couple of tech companies out there who are actually pushing on their own learning management systems. They've been working with schools to go down and basically create integrated kind of learning management along with content, as well as basically a live kind of a classroom experience where teachers and everybody can take on that kind of a thing. So yes, learning has been a major shift out there. And as again, for my son, as I see right now, he's studying in engineering. So if I can see him basically doing his classrooms on Google Meets right now. So every day they have this classroom going on every morning. So learning and skilling has definitely gone, but a lot of those things have gone online. The flip side of learning is specifically from a science side, because for example, when you look at somebody who's on, let's say, medical, or maybe somebody who's on electrical, or somebody who's on physical, any kind of physical, for example, chemistry or something else, they need the lab experience, and that entire lab experience is going to go amiss in the next 3 or 6 months. And that's going to be very, very critical. How are we going to impart that? Are we going to use any kind of analytical tools, simulation tools, or what are we going to use? I think that's my...
Sure. Along with learning, I think what a lot of companies, not just startups, have been doing during the lockdown is using the opportunity to reach out to all their customers.
Yes.
Which is, you're too busy doing your regular work. Nobody did that on a concerted basis, but they're doing this, taking this opportunity now.
And believe me, it has worked out. For example, in my case, especially I've seen for Atom, our sales signups have gone up 2.5x. Because problem is people to spend time, talk to partners, get back the old partners who have moved away from us, rebuild the relationships, rebuild the customers. I think that's really worked well. I think what you're saying is a point bang on.
Okay, I have a specific question also for you, Dewang, from again at the registration time. What opportunities do you see for early stage fintech startups now, having sort of been through 5 months of pandemic?
So one, basically, if you're going to come into fintech, you need to be very clear in terms of what space you're going to get into. So one, it's because the space is going to be highly regulated over a period of time, because as you look at RBI coming in, they're trying to narrow down on the regulation, especially digital payment. When I look at it, RBI already has come back with the guidelines in last March in terms of tightening, basically, and creating a licensing mechanism for digital payments. Lending, they've gone and created those guidelines and everything. So first of all, you need to decide what area you're going to go into. Second is that problem solvable? Because there's something, are you trying to solve something new out there? And third, do you have the right kind of capital at least to survive for the next 1 year? Because again, the sense out here, which I said earlier also, is if you do not have cash right now to survive, I think there's no point in getting into something right now and trying to do things, because a lot of people have their own families and a whole lot of other things. The idea is basically you don't upset your apple cart out there, come back to it later on, into the future later on. But yes, in the current point of time, you have to be focused on areas which are really solvable. And especially when I look at areas practically, one is basically looking at the last mile. Basically, how are you going to have solving basically a last mile problem for the migrant labor and a whole lot of other people around there, because large part of car traffic and everything, because a whole lot of payment channels have already got integrated and innovated right now, thanks to NPCI, thanks to RBI's intervention and everything else. But I think you have to look at where and which area you want to be able to focus on.
Sure. Before I carry on, Dewang, I have another question for you. But before we carry on, just wanted to say, Shabnam has suggested that we extend by 10 to 15 minutes. Would that be okay with the other panelists?
Yeah.
If everyone is okay and participants would like to, we would extend, say, up to 5:15. So a specific comment, Dewang, on what you were saying for a startup. Obviously, selecting the right sector or subsector is critical. But would you also not say, apart from the technology and the platform itself, one needs to understand the customer behavior and the kind of way customers use those products, as much as having a good platform as well? Would you say that's critical or not?
Yeah, I would. If I look at it, I think that is the first thing that we need to do. Because when you talk about solving a problem, you need to know how the customers are going to behave. Because technology comes later on. Because unless and until you have a problem to solve, what are you going to create a technology for? So that is, of course, the first step, and then basically going on to creating the technology.
I raised the question specifically because I have come across a number of fintechs where I believe that may have been not entirely present.
No, I agree with you, because when you look at I have seen them with a lot of lending startups and people who just gone and created a lending platform. But essentially, what are you trying to solve? You are actually getting into the lending space. If you do first line default guarantee or something else, you are a lender. So you think like an NBFC, you have to see how are you going to look at maybe from NPAs and other things, and how are you going to reduce the losses? How are you going to ensure that KYC and other norms are being followed? I think that's something that's going to be kind of basic.
Thanks for that, Dewang. There are a couple of questions for Santosh. There is a general question, Santosh, on how do you believe that startups have been impacted because of the pandemic in terms of valuation?
Thanks, Arun. I mean, there are maybe 2-3 subsectors which would have actually benefited from COVID. Maybe they would have seen a higher number of subscribers, number of transactions, even ticket sizes going up. And classic example is edtech companies, mainly because of the lockdown restrictions and the fear factor. And also due to the fact that I think there are so many tech-based businesses, but this is one, edtech is one where you can actually completely be digital. I mean, whether delivery, whether consumption, completely digital without actually, I mean, relying on any hard infrastructure. Food tech, grocery delivery, all that is requires some element of hard infrastructure reliance, but edtech does not. So they are the biggest beneficiaries that we have been seeing. But then there are other subsectors which are, I would say, benefited because there is a shift from offline to online. But whether overall business has improved for them, maybe not, because the market size has come down, but their market share has improved. So their valuations on an overall basis might actually be impacted slightly because the market size itself has come down. I mean, I would actually put maybe fintech in that space to some extent on a broader, I mean, I would say general fintech. The transactions have come down, or the size of the transactions have come down. So valuations may go down there generally, but then at least they have not lost as much as the non-digital guys would have lost. And then that's how I think if you look at it generally, I think it would be slightly negative. But then I would say some would have performed better than the offline guys. And on a regular, that's what we have seen. If you see the way Nasdaq has performed, it has outperformed Dow Jones or any other index purely because of the tech element that is there, and they have actually benefited to some extent, either relatively or on an overall basis.
Okay. Now there's a specific question also, Santosh, on how would the valuation of what will be the main metric to value a marketplace healthcare company?
A marketplace healthcare company. So I'm assuming when you say marketplace healthcare company, maybe they would mean something like a Practo sort of a thing. Maybe.
Possibly, it was a question that was raised at the time of registration. So
that could be a e-pharmacy as well.
E-pharmacy as well.
Possible.
So the impact could be actually, I would say, positive here. One is because of the health change in consumer behavior and preferences, and also because of the change in government policy. I mean, telemedicine policy has changed. Government was a bit, actually, if you see a few years ago, government had pulled up Practo or other companies similar to that, saying that solicitation of business by doctors is not allowed, and you guys are actually an advertisement platform, and then things like that. But then now, actually, if you see during the lockdown, the government was pushing people to say, don't go to hospitals, call your physician and things like that. So all this would actually make this industry, I would say, go in the right direction. Maybe what they would have achieved 2-3 years down the line, they've started achieving today. So yes, it's a positive impact for.
But I think the question was a little bit more specific in terms of what would be the main metric to value something like that.
Sure. I would say it is very difficult to say at this moment. I mean, you can maybe pre-COVID, you could have said that maybe it is based on the number of subscribers, number of active users on the platform, number of active doctors on the platform, or number of pharmacy stores that you have linked to. But then with in this current situation, maybe the metrics might change. We don't know. We'll have to see. And then over a period of time, these metrics might actually, the benchmarks might change, and then they may actually develop. Otherwise, yes, generally the metrics would be something like the number of subscribers you have, the number of active customers you have, the number of doctors on your platform, and other vendors on your platform. These could be some of the metrics that we use.
Sure. Thank you. I have a question specifically for Ajit, which I'm waiting for questions from participants. So in the meantime, I thought I'll ask you, what has been the impact of COVID on HealthSpring?
Yeah, so
that's a physical delivery model, right?
That's right. So they're struggling a bit to make the transition from a physical delivery to a more digital kind of a space, but where they're sort of hoping to get benefit from to get into areas like patient data and insurance and things of that nature. I mean, I don't want to specifically talk about a company's strategy here.
No, I understand.
Yeah.
But that does bring up this whole question. I think I did see a question earlier on pivoting a business model. Would any three of you have any comments on when is a good time to pivot the model? A crisis like this might be a good one, but anything specific you can
I think in the crisis like this, you should do small experiments rather than going for a full overhaul out of and creating a new pivot, and see what works and what doesn't work. Because again, as I said, Cash conservation, we've spoken about quite a lot out there, and any pivoting requires certain amount of cash, moving from one shift to other shift. One critical thing which will people, I think what people and startups would need to focus on is, if you have maybe 5 products in your product line out there, try shutting down those products which are not revenue accruing out there and put them on a slow burner right now, because you don't know how long this winter is going to last. So put that on a slow burner out there, look at your fast moving products, move on those and focus on those to drive them separately. If your entire business model is not working, try small pivots out there, try to scale down your business operations, because you'll be technically multiplying your losses as we go forward, because we are not going to see this opening up as wide as it was in February or March any sooner right now. So it's going to be maybe another a quarter before we really see the economy opening up fully, because some confidence is there. So people would need to take those baby steps right now. So that's some of my advice out there for a whole lot of startups out there.
Yeah, so if I may just add to that, what we are seeing is, and particularly the larger players in our space, and now I'm talking more about the life science tech space. They have a whole bunch of products, and they are revisiting their product portfolio to say, I have 10 products. I want to, pare it down to say 5 or 6. But therein lies the opportunity for startups, because the need that those other products serve still doesn't go away. So if your platform in any way, or if your product in any way can address some of those needs, you then sort of become the replacement technology, or a technology that clients can transition to in this situation. So somebody's decision to cut back on certain products can be a huge blessing for startup. That's also happening in the drug space, right? As companies say, I don't want to I want to pare down my either the therapeutic areas I'm working on or the drug candidates I'm working on. There are startups emerging or saying, these are areas that we want to take up. I always have a habit of saying this, for a Pfizer or a Merck, any drug less than a $500 million revenue is of zero interest to them. For a startup, $500 million is amazing. Right. So that's another way to look at it.
Ajit, there's a specific question from a participant for you. Any tips on how to crack an MNC pharma company and a medtech company, given they might be open to collaborating with startups now?
Yeah, it's really on a case by case basis, but few fundamentals still stay true. They're all looking for digital transformation solutions. They're also all looking for a solution that will help them either operate more efficiently globally. That will help them, for instance, produce a drug in one location and distribute in another location. How do you actually do that? I mean, it's a fairly lengthy answer, but you have to target the right group, the right department. If it's an MNC, go to the headquarters. Don't go to the subsidiary in the country you are targeting in. Most decisions get made at the headquarters. So you start from there. You can use the country you are in to try and get a intro into the headquarters, but decisions get made at the headquarters.
Okay, there's one question which any one of the three of you might like to answer. Are there any opportunities to make in India and replace China as a source?
APIs, big opportunity, huge opportunity. Diagnostic kits, significant opportunity. Of course, further growing vaccine production, that's going to be there for a long period of time. Biotech manufacturing, significant opportunity. I mean, I can rattle off like 10 different ones.
Sure.
in my space.
Sure. But some of these, like API manufacture, surely will be, you need to have fairly deep pockets to do that.
Oh, but it's not just that, right? You'll also need government support because
Yes.
certain legislation has to change.
That might be forthcoming, Ajit, don't you think?
Yeah, it's a I mean it's a good time to engage with the government right now if you are in that space. And by my experiences, they seem to be fairly open. Particularly the China bogey has sort of awakened them. They're willing to listen.
Yeah. So I thought we'll pull it back in the absence of too many specific questions here. I thought we'll pull it back a little. We've got a couple of minutes. I'm referring to Santosh's earlier presentation, where he talked about most of the startups surveyed in terms of impact of the pandemic had less than 3 months cash available with them. Now, surely this is a phenomenon with startups in general, that they're pretty much tight for cash. And I remember a statistic that 8 out of 10 companies that got first round funding never got a second round funding. That number could be slightly inaccurate. It could be 7 or if not 8. But would anybody else like to comment on that? I mean, it's
Yeah.
I was saying
So
it's a general weakness of startups rather than, I mean, it's exacerbated by the pandemic, would you not say?
I tend to disagree, Arun, because
Okay.
I have a fundamental belief when it comes to startup funding, right? If your first round of funding is from the right sources, and you haven't been impacted, chances are you will get a second round of funding, right? And what I mean by that is your first round of funding validated by the industry? Right. I always use a benchmark. It is at least one of your investors from the industry who understands your value proposition, and not just understand, who can vouch for your value proposition. So I mean, I don't want to be sort of not knowing what these startups are facing there, but I just want to make that comment, and I have.
Sure.
I'm saying this from having raised loads of money across 4 companies.
Okay, great. That's very helpful. So I think we just have 2 minutes, so we'll have any last comments from the panelists. Since you're on the mic, Ajit, you want to?
Yeah, as I said, as I said, there is really no good or bad time to be an entrepreneur. Entrepreneurship has seen the best of results in the worst of times. Okay. So if your call is to be an entrepreneur, don't get deterred by the pandemic. Certainly not.
Okay, great. Thank you, Santosh.
Yeah, you were talking about Make in India and how that would impact. I would say that maybe there's a great opportunity for something like B2B sort of businesses, B2B digital aggregators for small and medium-sized enterprises. The fact that the supply constraints are there, maybe aggregators could actually benefit and also benefit the small and medium industry.
Sure. Thank you. And Dewang? Concluding remarks, please.
Fundamentally, one closing remark which I would like to make is think of innovative ideas, think of solutions which nobody's thought of, because this pandemic has given a rise to a lot more newer business models and newer business nuances out there. I think a lot more new set of problems can be solved as a result of this pandemic, and definitely all of this are going to require digital transformation and using digital as the way to go. So I think anything that has a tech element along with that is definitely going to solve a lot of problems. So be innovative. That's one thing very, very clear for everybody.
Thank you very much. So with that, I would once again thank the 3 panelists, Santosh, Ajit, Dewang, and of course, Shabnam and the TiE Mumbai team for organizing this webinar. I thoroughly enjoyed my participation in this and being a moderator. Thanks all. And thank you definitely to all the participants who have taken time out to join this session.
Thank you,
Thank you.
for moderating this session. And thank you, Santosh, Ajit, and Dewang for the insightful session. And with this, we would like to thank Duff and Phelps for co-hosting this program. And Duff and Phelps research report is available on our website. And plus, we will email to all the participants. Santosh, quick question. How one can connect with Duff and Phelps for their services, basically for your services?
Website has email addresses. People can actually drop in an email, and we'll be happy to reach out to them. And
Sure.
if anybody on this webinar wants to reach out to us, actually, I think the email should be available on this invitation. So please reach out to us, and we'll be happy to serve you.
Sure. Thanks, Santosh. And participants, we would like to plan our next session on 2 different sectors with added commentary from Duff and Phelps. So, can you also just suggest which 2 sectors you would like us to cover? And next week, actually, we are planning another session. It's a 6 days module on design thinking and business model creation. So if anyone is interested, please join. The details are there on our website, and plus we have email to all of them. And with this, again, I would like to thank Arun, Ajit, Dewang, and Santosh. Yeah, thank you all.
Thank you. Bye-bye.
Thank you.